All right, what is up, everybody? Welcome to the Tuesday 10X interview. I was just thinking this morning that I have been doing this Tuesday 10X for a long time, and I've actually never been more fired up. I'm just getting more and more excited about the opportunity that Mortgage Coach has and that we have to help loan officers future-proof their careers. Today,
Mhm.
we have an incredible guest, Gina Myers. She comes to us live out of Virginia. She is the number one female woman loan officer in the state of Virginia. And she's also one of the coolest people I've ever interviewed. I really enjoy it.
You're
Gina,
funny.
yeah, when I post this on Instagram, Jeremy sent me a message back. He's like, I love her. She's like literally my favorite.
Oh, I
So
love Jeremy. He's the best. Such an
he is a
approachable
good
guy
dude.
and super down to earth.
Exactly, exactly. Yeah, I still remember one of my favorite takeaways from the last interview I did with you. I asked you, I was kind of asking you, like,
Oh, that
when
was
did
super
you,
fun.
it was fun. And I asked you, hey, when did you go from like, I'm good and I'm a top producer to like top in the state? And it was like, it was when I decided I'm only going to work with people that I like, trust, and respect. And I know that they like and trust and respect me. Like, do you remember that?
100%. Yeah, I love that. That was one of the coolest conversations I've had. And truly, maybe it's like with age, you get a little bit more comfortable with who you are and who you want to work with. But it really is the name of the game. And as you become more confident and you believe in yourself and who you want to work with, it it really goes a long way. And the business has continued to grow. Just yeah, I constantly say that to myself over and over again. Is this a person that likes, trusts, and respects me? And do I feel the same way about them? So it really helps. It helps also keep, I have a lean team, right? So we can't help every single person out there, even though I would wish I could, but it just keeps us at our top of our game and happy every day.
Yeah. And well, how are you doing right now? I mean, it's towards the end of July 2025. How have you been doing so far this year? How do you think you're going to close out the year in terms of volume?
Yeah, we're doing really well. We're about between 5 and 10% better than last year, which I think is good. Um, we started the year a little slow. Like my husband reminded me of that last night when I said, "Oh my gosh, I need a break," and he said, "Okay, so remember the time in March when you said I'm really worried about this year?" And so there's obviously some seasonality to it for sure, but we are doing better than last year. The loan amounts are also bigger, and doing multiple transactions for a couple people at a time, right? Whether it's a bridge loan and then into a purchase, so you're doing a couple deals on one situation. But year to date, I think we'll probably end July around 70 million, and then um, yeah, I think I'll probably end up around like 120, 120 million around there,
Well,
I think.
number one loan officer in this, or female loan officer in the state. So
Yeah.
congrats on the success. Guys, this is a mastermind. So if you have questions for Gina throughout the conversations, put those in chat, whether you're watching this on Facebook, watching this in our Zoom community, and even if you're watching this on YouTube, we'll get any questions answered. So Gina, since I interviewed you last, AI is continuing to evolve. And I interviewed a top futurist last week, and he said that, hey, in the tech space, 2025 will be called the year of AI agents, where we went from AI to like agents, agentic AI. And then, I haven't talked to you since Rocket bought Mr. Cooper. 1 out of 6 mortgages is now being serviced by Rocket. They've acquired Redfin. 60 million consumers monthly are going through that Rocket experience. For you,
Right.
as a local professional, how do you process that? What do you think about that? Positive or negative? Just what are your thoughts?
Sure. In general, I would say good or bad. I'm not an overly analytical person compared to, like John Downs. He crushes the analysis, right? Like I adore John. I think he's awesome. And that's his sweet spot. I think that's awesome. I That's not just who I am. I can't overanalyze, and not to say he's overanalyzing, but I can't go down rabbit holes to forward think on some of what that might mean for our industry per se. But what I can tell you is if you're ignoring it, you're going to be left in the dust. So, how am I using it, implementing it day to day? Really simple techniques that everyone can do. And I'm sure you guys are using this, but uh, I use ChatGPT a ton all day, every day. I will take a complicated situation that I've had a conversation with a client and I will, talk it right into ChatGPT and help me kind of create a nice little email. I train my team on how to use it, right? They've realized, oh my gosh, taking something and asking for multiple things and explaining why you need it. They've been using it for email drafting and it's really been a game changer just to speed, right? So taking information and using it. Also with my mortgage coach presentations in the past, I think I told you this, I've made changes where kind of going back to the beginning when I had a big team and I did a lot of loans, and a lot is not a bad thing for sure, but I realized that instead of them sending the video message or me sending the video message, I actually have a significantly higher conversion and don't have to talk to as many people as if I just share my screen. So that is part of my process is the next meeting is to share my screen. So using the AI for that though is that I will record the call in Zoom just like you're doing now, and then I'll turn on the AI companion. So if one of their co-borrowers cannot attend, or if they're, if they really would like to get more granular with detail, I will offer them to record the meeting and send an AI summary. So as soon as it's done, I'm not only sending the mortgage coach, but I'm sending our entire conversation and with summary minutes. And that has been a game changer, right? Because these people are really busy and half of the party can't be in the meeting, so they want to be a part of the conversation and the other half doesn't want to have to mess up if they don't understand how something works. So I think using that now, you're the new tool that Mortgage Coach has implemented. A way that I would utilize that is by saying, okay, on this conversation, I'm going to be explaining to you every single closing cost, which fees are required, which fees are optional. But if you have any questions or you don't remember exactly what I've described as this fee, you can just ask the chat bot there to for a refresher on exactly what that means. So I think that whether the clients are hearing it from you, but then they also want to reconfirm that what you said is true to create some validity. I think all these tools are awesome, but that's how I've been using it mostly.
Well, my takeaway from what you said is that you haven't really got down the rabbit trail and analyzed it, but you've made a decision that if you're not, using AI, you're not using Mortgage Coach, you're not delivering, like, let's call it a next generation experience to the consumer, you're going to be left behind, and then you've said, and hey, this is how I'm doing it. I'm using chat daily. I'm using it to simplify things. I'm using it to improve my communication. I'm using Mortgage Coach more than ever. Whenever I can use technology to provide convenience and value to the consumer, you're adopting it and you're adopting it
Convenience
rapidly.
and speed and like professional experience. So on that note, you hear about things after the fact, but over the weekend I was helping a client and it was a new realtor, and then they saw, because they were over the email communication, the experience, right? And the next thing you know, they're sending their new clients my way, and then I learned through the grapevine, because maybe some people, other lenders, weren't thrilled about it in my market, and they said, if this realtor, excuse me, this lender, Gina, is doing such a professional presentation, I expect you to do that too, to their lender. And now they're calling me like, can you teach me mortgage coach? I'm like, oh my gosh, you better catch up, but it's not hard. It's not hard at all. And so I can put something together so fast that looks extremely professional, right?
Yeah. And guys, the modern experience is the fastest, most efficient way to do something that creates the most convenience, the most value. And I think Gina said speed fits within convenience. to the consumer. Like that's it. And so I would ask you, but I would love to know in the mastermind right now, like what tech are you using? So like Jeremy, and you may know this, you may not know this, he uses Plod. So he's got
Yeah, yeah, the plow device.
yeah, so
Yeah, I
Gina,
love that. That thing's awesome.
it is awesome. I use Otter. I did buy a Plod, so I have Plod and Otter. But
Cool.
what are you guys doing? If you're watching this call right now, put it in chat. What AI are you using daily? And then I would love to know if you're not using AI daily, I'm not gonna ask you to put it in chat because you probably won't, but why not? I really like, why are you not using AI daily at this point? And then if you are a mortgage coach, you truly have AI built into every single borrower experience so that not only can you, give them your advice, you're letting them hyper personalize it. So now they can interact and ask exactly what they want. And I want to remind everybody, you're getting a transcript of that. So now you know exactly what that customer asked. You know how it was answered. And I'm hearing a lot of mortgage coaches where they're just, hey, I noticed that you had this question and this question. I want to make sure that you got the answer you needed and it was clear. So you can be more proactive and preemptive with your communication. So Gina, let's kind of move into what's working. Like to be doing the kind of volume, to be up over last year. What are you doing that's really working? And by the way, everybody who's answering, ChatGPT seems to be winning. Grok, Gemini, Hoozy. Highly recommend everybody checks out Hoozy. In a minute, I'll put a link if you want to get a
Oh, I
free
don't know
trial.
about it.
The thing I love about Hoozy is it was designed for the real estate industry to help realtors, one, learn how to use AI and use AI, and then it aggregates. So you can use chat, you can use Gemini, you can use all the mainstream platforms within the Hoozy interface, and
Oh,
it's
wow.
it's designed for the real estate industry. So guys, we will
Okay.
put a link in chat. Uh, I've interviewed the founder and CEO Eric Post twice. Super good dude. We'll put a link to the last interview I did with him down below. All right, Gina. So what's working?
So obviously we're talking about how to make things easier, faster, better, and we're going to, as a lender, I'm going to be competing with, we just described Rocket, and when rates come down, I'm pretty sure people are going to use ChatGPT to say who's got the best rates, who's going to, there'll be some streamlining of that, and things will look a little bit different. So the things that are working for me are just higher level strategy conversations. And I think that, I don't know about the rest of everyone who's on this call, but in my market right outside Washington, D.C., things have slowed down, I'll say more balanced, right? It was hyper competitive for the last couple of years. And most of the time and most of the strategy was around how do we win? How do we beat out 20 offers? And that was fun and that was successful. But kind of when I take a step back and think about that analysis, what do I think clients or agents feel now when it's not as hyper competitive? Do they feel like they don't need me as much? And what I'm telling them is no, that's the opposite. You need me more than ever, or you need this strategy. You don't need me, but obviously I think that, but you need the strategy. And so they're like, well, what do you mean? So when things were really hyper busy and competitive, one, we were working a ton, right? Because you're not helping clients with just one offer. You're writing probably 5, 10, maybe more. So that's a lot of time and effort. And you're going through appraisal gap scenario. I remember showing one here, right? Gap solutions. How do they feel confident with waiving financing? What do escalations in sales price look like, right? And showing all this analysis, but then eek, what was happening? We all know this. We've all been in this position where the client finally goes under contract. You did such a bang up job with getting them under contract, and the realtor's thrilled, but they're maybe drinking champagne for 1 minute until they realize, oh my gosh, I won, but now I feel like I'm stretched. I might have gone higher in price than I was comfortable with. I'm a little bit panicked. Where is the only place that they can now push on their monthly payment or cash to close numbers? That's on the lender. So then what does the realtor tell them to do or their family members tell them to do. Call around, shop around, right? And I believe that, right, the whole concept of working with someone that you like, trust, and respect goes a long way. I really do believe that. But at the end of the day, the client is going to do what they're going to do and they're going to call around and they may leave you for an online lender who worked 0 minutes on that loan and decided to just basically make $5 on it, but they take the deal from you, right? And then you're left completely defeated and bruised. And so now I'm like, okay, how do I then show my strategy, but then also keep the business and really do more? And that's why I think I'm doing more right now is strategies like how to help people with going into the contract with their best solution for them. So right now what people are saying, like I have a client who there's a house that's been listed for 950 and it's been listed for 30 days. The seller might just take it off the market and relist in the spring when probably values will go back up if rates come down next year. But the client's like, "Oh, Gina, my payment is too high. How can I win this?" Well, instead of going in and just offering a lower sales price, I say, let me show you. Let's look at different solutions on a permanent rate buy down or temporary rate buy down or covering your closing costs to kind of keep some money in your pocket so that you can make that slightly higher payment than you were otherwise comfortable with. So right then I catch their attention because they said, no one else has told me that, right? So real lenders unfortunately just send kind of like the option. Oh, you want to put 10% down? Here you go. And they're like, this isn't working for me, so I'm just not going to move forward. So the realtor's like, Gina, we need help. So I have the conversation and then I present to them. I actually have this call later after this meeting to present this solution where that using a temporary rate buy down or offering a lower price, like what is that comparison? And a lot of clients tell me, oh, Gina, right now, I know I can afford that on paper, but I have these other things going on. Like I have 2 kids in daycare. That's $3,000 a month. So I know that daycare bill will be going away, but I can't do it right now. So then I'm showing them how to do it now versus later. And that's where I really think the mortgage coach comes in because we have a professional presentation. And what am I doing then? I'm helping my realtor partner, get a deal across the finish line. I'm helping the listing agent get a deal across the finish line. Obviously, the seller wants to sell the house and not carry it for another 6 to 7 months. Um, so it's been, I think, a big win because then what happens then when they go under contract? Are they going to call around and get other quotes from other lenders? No way. No way, because I basically showed them how to use their leverage to the best of their ability, not just, oh, I want to get a lower price. That's going to change their monthly payment by $140. Oh, so no big deal, right? Okay, let me show you how you can save $1,000 in year one, and they're like, whoa, what? Show me how to do that. And so there's more opportunity, there's less time worked on it, right? How much time did I spend with the client? And not that I don't mind spending time, but the faster we can get them to go under contract, the more loans we can do, right? The more people we can help. And the more I've guided them to be their advisor to get the leverage in their best interest, they're not going to call somebody else. So that's why I think we're doing more right now.
All right, guys. So I want to do something real quick. I'm going to hit the little mic button
Oh.
on ChatGPT, and I'm going to create for you a Gina Meyer playbook on how to do this. So here we go. Create a Gina Meyer playbook on how she is winning in today's market. And what I heard her say is that she is finding out the problems that consumers have. Like, by the way, Rocket doesn't know what their assumptions are. They don't know what they think values are going to do. Rocket doesn't know what that consumer thinks rates are going to do. She described a story and a strategy where a consumer wanted to buy the house now. The seller was going to wait till next year. They expected rates to come down and values to go up next year. By the way, things that Rocket doesn't know, things that most loan officers don't know, but Gina knows. She knows their assumptions. And then she is crafting strategies to help them solve their problems, which usually involve giving them options to
Mhm.
buy that house right now, to go from wanting to buy the house to actually winning, and sometimes in multiple offer situations. By the way, Gina, anything you want to add to that playbook? Did I get it all before I hit the button?
Oh, no, I'm excited to hear what it says.
All
I
right.
think that's great.
All right. So stay tuned, guys. Chat's working. There's a playbook. So that's one thing you're doing. You're just what I heard, you're asking better questions. Maybe you've always asked those questions, but you're listening better. You're using AI. You're using Mortgage Coach to present those options, and it's
Mhm.
further differentiating you in the market. All right. So chat is
Well,
working. Stay tuned, guys. I'm
okay,
gonna
and I'll go on to say one more thing because so then how do we share this, right? So one thing I realized after preparing for this conversation today was, wow, I am doing all these things. And how do I share it? So then while I was walking the dog this morning, I asked ChatGPT to help me with that. So now I'm like, okay, every Friday I'm gonna do win of the week and share one of the strategies that I presented to a client to through Mortgage Coach, of course, to help them go under contract. And if I just simply email that to the agents, I did all the work already, right? But now I need to share it. So that was something that I worked on with ChatGPT just by walking the dog and asking it, how can I set this up every Friday? What can I call it? And it gave me all these options and already gave me templates for my next 5 emails.
love it. So guys, I'm gonna copy and paste this. Are there, I know when I talked to Jeremy last, he was doing a lot of first time sellers. So he was, he actually had a first time seller script where, because let's face it, anybody that bought a home in the last 3 to 7 years, they have a lot of equity.
Yeah,
And that was one of his things. I also have been hearing a lot of buy before you sell, where helping people visualize like, hey, you can buy before you sell. Let me show you how.
for
Any
sure.
are those common strategies for you?
For sure. I mean, we do bridge loans all the time, portfolio loans of helping the client qualify buying before they sell. And then a lot of clients end up do selling before they buy. So it really is moving the needle forward with these particular clients. That's what I would say is the biggest change this year so far. It's not the clients that need to buy for a new job, a new family member, a divorce situation. Those were really the deals we did in the last couple of years. But so far, year to date, it's been like, hey, I have a ton of equity, or I don't even have a mortgage. How do I'm tired of this property. I want something else. I want something different, but how do I make it work? And yeah, that I probably do that analysis with clients 3 to 4 times a day. So,
Oh, wow. And
mhm.
what about any one-to-many meetings with realtors and any presentations that you're doing on a regular basis that's helping you win right now in this market?
The presentations really are specific to a lot of the portfolio loans that we've been doing, and I do think that goes back to I think that you kind of have to spend some time educating yourself on what's available. The cookie cutter loans the margins will be very thin. It will be a challenge to do them because of what we're talking about here, right? Making it more streamlined for people to get access to information. But where we're knocking out of the park is the portfolio loans, right? Asset qualifiers, bank statement loans, the DSCRs, buy now, sell later. And when you can solve, like I said, when you can solve someone's problem who I had a client, their current, they called me and said, hey, hopefully it's okay to say their name, Morgan Stanley. We have all of our assets with them and they can give me this like killer rate. And I was like, yeah, I mean, I've heard that before, right? If private wealth manager has a relationship, yeah, sure. I understand that maybe they can offer a better interest rate. But what happened, 2 months later when they're like, oh my gosh, we can't close. They say we can't help them. They had $4 million with their private wealth manager that told them, sorry, can't help you buy a new home. And I said, I can help you. Let's just do an asset qualifier. And we closed them 3 weeks later. I mean, I think their heads were blown. And the realtors now, like I was trying to work with her for years. I remember COVID, I was calling on her and she was like, look, I have my people. We're now like BFFs. And, she's like, you solved this. So, okay, that's obviously not mortgage coach related or AI related, but you have to continue to learn and expand the loan products that you can offer or solutions, and then be able to communicate and present it. So we've presented that in a big format. And then after that format, I've had multiple realtor partners asking me to meet with them and their family to present solutions. Um, so yeah, I mean, it's obviously thinking outside of the box. And when there is fewer business or less business to do, I don't think we have to be as afraid of the outside the box deals, especially if you work for a company that can control them from start to
Well, first of
finish.
all, just to add on to that, not only should not be afraid of them, you should lean into them. So, I mean,
Hmm.
think about the trend that's happening. Rate and term refis will be the most automated types of loans. So it'll be
Totally.
easy to do it. And even if you can win them, they're going to be the least profitable, and you're going to win more of them. On the other side of that spectrum, first time home buyers, people that, they're probably going to be the least automatable loans, and people are going to most likely want to work as much as possible with a local referral based professional. And right next to that are just non-QM product. I mean, and who knows, between non-QM, self-employed, people that need someone with some creative skills and not cookie cutter products, first-time home buyers and those products are going to be the least um, are going to be the most AI proof loans. So if you're a
Mm.
mortgage professional and you're not leaning into that and solving problems with people, that you're making a big mistake. What do you think about this? One of the things I've been advocating a lot, that most loan officers, you're looking for loans. You find loans, you win loans, and then you defend. Because let's face it, when they run the credit report,
Yeah,
or they just say the word mortgage out loud in the house, they're shopping. So it's
right.
find, win, defend. But I think we have moved into an era where we also need to create loans. We need to go higher into the funnel, and we need to be the one to help a consumer go, oh, I hadn't thought of that. I should,
Mm.
or, oh, I didn't think I could buy my first home. I should. What are your thoughts on really leaning into being the creator of opportunities instead of just waiting to find them? Any thoughts on that?
Brilliant. Probably where need to spend a lot more time, to be honest with you. And I think that that's I think that's going back to sharing information. So, um, I probably was a bit more reactive than I could have been. I do believe that we live in a world where perception is reality, and people they're bombarded with information all day, and how are you going to get back in front of them with ideas? So, uh, social media is really going to be a big part of that, and also sharing these wins with people, right? So I'm trying to remember the name of the book. Story Brand it might be, but
Yeah, Dr. Miller.
is that it? Yeah. So people, I think humans want to be inserted in other stories, or where would they fit in the story? I mean, think about the stuff we watch on social media. It's like proposals and gender reveals and all these like exciting moments in time. And you're like, oh, what would that feel like to be that person and feel that win? So I think sharing wins, right? Sharing wins of how did you help someone or advise them, right? That's kind of the story brand concept. How did you take someone in this situation and help them? And as humans, we always take ourselves and think, how would I fit in this? Do I fit in this story? And if I do, let me lean into it. And if I don't, I'll just look the other way. So maybe taking some of that analysis and educating the realtor partners, educating the clients. But I would say where I have gotten more business is creating business is by educating the realtors, just by telling them what I'm doing with this particular client. Even the listing agent, I just got a referral from a listing agent who said, "Hey, I understand you're helping the client with this bridge loan." And at first, my first instinct is, "Oh, how do they know? How do they know I'm doing a bridge? Will they think I can't get it done?" You know what I mean? And but no, they're like, "Can you tell me how you're doing that?" And when I walked them through it, they said, "Do you think you can help me with that?" So I said, "Oh, well, sure." So maybe not being as afraid of like, will someone think differently if they don't just have the cash sitting in their checking account for the down payment, right? It be normalizing some of these opportunities, and talking about it and sharing the story. Yeah, just letting people feel like they can be a part of it. Or it's so funny that when you hear something, you hear, "Oh, hey, I'm buying a new car. I'm getting a Ferrari." And the next thing you know, you're driving down the street and you see a Ferrari. It's just like when you hear about something and you see it. So it's letting people know about it, letting the realtor partners know, because ultimately I think that they end up that situation might be presented to them. So just telling stories about how it's worked is what I'm going to try to do by implementing a win of the week.
Well,
But yeah,
let's do this. So guys, we were at halftime. Use the little reaction and let us know what you think of this call so far, this podcast. Personally, I think it's been awesome. I want to dedicate the second half to like tactical strategies, maybe have a total cost analysis you can show. I am going to play a little 1 minute clip from my last, well, two interviews ago with Jeremy on the first time seller, because I think the two biggest opportunities we can create are first time buyers. Like, I
yeah.
literally think we can help realtors sell more homes.
Hmm.
We can help do more loans by using social media. And of course, the Mortgage Coach Next Gen app will tell you, like, hey, here's someone who's thinking about buying a home. But I want to play this little script from Jeremy, and I want you to think about of the total cost analysis that you have, either a buy before you sell, because I think that's a pretty common reason that someone may not want to, you know, move up now. Or they're like, oh, I've got a 3 or 4% mortgage, or a 2, 3 or 4%. Do I really want to move up and do a six? So think of a TCA you have. Let's
Sure.
play this little script from Jeremy, get your thoughts on it, and then have a TCA that would help you execute on this. So here's the Jeremy Forcier. By the way, this is a script on how he's training realtors to go into their database and find first time sellers. And then he's doing the same thing with his database. Let's check it out.
You need to know what they purchased the house for, okay? And you need to know what it's worth now in the minimum, your CMA, your current market analysis. If you want to go real pro, you know what they bought it for, what the value is, and what their down payment was. Okay. So there are two different scenarios. The one with the know what their down payment is, that would be like a past customer and have them call you, the lender who did the loan, or get that information from the lender that did the loan. Okay. So here's what the script sounds like. It's like, hey, Dave, it's Jeremy Forcier with a CMA real estate company. How are you? How have you been, etc. Listen, I was doing a review of people that have like done really, really well on their home purchase, and you were one of them. So when
Mm.
I look at it, you bought this house for $500,000, 5 years ago, and it's currently worth $750,000. That's a 50% return, like on your investment over time. You've made $250,000 like in equity. And when I look at like what you put down as far as a down payment, it says that you only put down $100,000 on this, and it's gone up 2.5 times. So you have literally made 2.5 times on that investment just over a 5 year period. Like, I'm so happy that we could have helped you with that. Hey, let me ask you this. Are you interested in creating more wealth with a bigger asset? Like, if you bought a house that was worth a little bit more, you could just do this again and keep creating more wealth faster. Is that interesting to you?
So, first of all, any thoughts on that strategy and a way to create opportunities?
The goat. Oh my God. Yeah, I'm definitely doing that. We have all that information, and we can look, obviously be a value add to our realtor partners by setting them up for success there. And I think most people don't really think about their home as an investment. I mean, we have some apps, right? Some things like HomeBot and whatever, but I don't think the average person really sits back and thinks that through. So I definitely taking that one because I have all the data and can arm our realtor partners and send some business back.
Yeah, so what do you think for a first-time seller would be the type of total cost analysis presentation that would help them? Okay, I'm clear. And do you have anything you could show us real quick?
For sure. Yeah, I had a client who reached out and we closed the bridge yesterday. We're closing the purchase on, I think it's like Thursday or Friday. Um, and the first comment to me was, she was like, "How do people do this? You know, how does someone who's created equity be able to buy before selling?" And she said, "I called big bank. She called her big bank, and they just said you need to sell first." And she said, "Well, okay." And then they were just totally stuck. So then enter in the realtor partner who said, "Call Gina." And of course, it was a high energy conversation because I said, I'll show you how to do it. Where there's a will, there's a way. And there's obviously these new loan products that I can show you. So I'll share my screen and show you this
Okay,
one. Oh, can you see it?
you see it.
Okay.
And by the way, are you
So,
going to share this Mortgage Coach
of
TCA or something?
course, I renamed it so we can share it
Beautiful.
around. So the
Love it.
first column, I obviously talked to her about the bridge, right? So we looked at the cash that she would receive. I can spend a lot of time educating people on the bridge and all that good stuff. But then she said, all right, well, I want to buy something around 1.5. This was 1.495. We looked at 20% down. The cash to close was 344. And then we looked at the 15, which she loved because she could get from this around 240 bridge, and she had some savings, of course, but not enough to get it there. And then I said, look, if you sell first, you can absolutely end up going the path that you want, or because there's still equity remaining in the home right after the bridge. This is only an 80% combined loan to value. But at the end of the day, it was so important for her and her family to move to the suburbs, to have a big home, and this was what it was able to get it done, and they're thrilled. So they had to tap what, like 30 grand of their own assets, 35,000 of their own assets to come up with the money to be able to buy a $1.5 million home, and using a product called buy now sell later. But I do present the solutions because a lot of times when people are really motivated, they'll end up selling first, and then my realtor partner gets, the buy and the sell out of it because they're controlling both. And then they end up, I'll say, the rate will certainly be better. There's no denying that. But this is how you can actually do it and say yes. So otherwise, they wouldn't have been able to buy anything unless they sold first. And they have 4 kids, dogs. There's no way that they're going to be able to make an offer non-contingent. And truly non-contingent is still very strong. So it's hard to write a contingent offer. So yeah, pretty straightforward, and people can see the cash that they would walk away with and then how to apply it. So,
All right, so Gina is going to share that link in chat. And if you're watching this in YouTube, we'll have the link down below. Great example of how you're just showing the consumer options. I know when Jeremy showed me a similar example, he showed what the future refi might look like. Do you
mhm.
ever show what the future refi might look like? Again, based on their assumptions. You don't want to lead them, but if you're like, hey, what do you
For
think?
sure. No, I absolutely will do that too. In this case, the way that I set it up to discuss that was also if they ended up selling first or what the refinance could look like later. So because the bridge loan strategy in this case, I needed to keep 80% combined loan to value. And so that on the departing. So they still have remaining equity. So I talked to them about, okay, well, if you sell first or if you refinance in 6 months to a year, you can get back down to a lower interest rate and a lower monthly payment.
Okay, great. We'll stop
But yeah,
sharing.
like, okay.
And then I'm going to show another video this time. I mean, I've actually got quite a collection of examples of first-time homebuyers where top mortgage coaches have created. This one's pretty funny. I'm not going to do this one first, but Sean Herrero used AI. And
Aw, he's
well,
so
okay,
funny.
we'll do this one real quick because I think it's like 30 or 40 seconds, and then we'll do a minute of Denise Donahue. So
Okay.
Sean used Flow, which is a Google app, and he created this AI, and he also used a Mortgage Coach TCA to create first-time home buyers. Check it out.
What up, fam? Today is a special day. I just became a homeowner. I was super nervous, but this dude, Adventure Lender, showed me something that blew my mind. So I'd been renting my apartment for $2,800 a month and always just thought of it that way, $2,800 a month. But this dude takes the time to build me a personalized buyer's guide site and shows me that over the past 3 years, I had spent over $100,000 in rent. He showed my realtor how to get the seller to cover my closing costs, and I got into my house with just $15,000 out of pocket. Chat, this is my favorite part. That $15,000 initial investment turns into like 90 grand in 3 years with 4% market appreciation and my loan balance going down with each payment. I'm so stoked I hit up Sean. You should too, just to start building your plan. DM him on Insta. See y'all next time.
Gina, what do you think about that
Dude,
one?
he's hysterical and he's so smart, and I love his marketing brain. And it really kept me engaged for sure. And I'm like, oh, that's funny because I have that same strategy, but nowhere near as fun
Yeah.
as Sean.
Yeah. I think the takeaway is figure out your way of telling the markets that you serve how like, because a lot of people, they still think they need a bigger down payment than they actually do. They don't think of the financial gain. Here's a mortgage nerd version. I think it's a kind of more typical type video that mortgage coaches are doing. Let's play just like less than a minute of this just to make the point. Wait.
This is why lender discovery calls is so important. I'm going to show you guys this math. We had a first-time home buyer. They were 36 years old and they were curious about what it would look like if they bought a home. They're currently paying $2,500 a month in rent. It's for a small 1-bedroom, 1-bathroom apartment. She's got 2 dogs. They were tired of it and they said, well, what would it look like if we bought? We have no idea. So here's the analysis we showed for them. Here's their $2,500 a month in rent. If they bought a home, they put 5% down, which they had in their 401k because they've been working longer. Then they could put 5% down. They could own a home for $3,700 a month. They would have 3 bedrooms, 2 baths, and a big yard for their house. And the best part is when we analyzed the rent versus owning in the first 24 months, we saw that rent, they would pay $60,000, almost $61,000 barf. But with owning, they put $9,400 back in their pocket because of their payment, $9,400.
So you guys get the idea. We'll put links to both of those. Like if you're watching this on YouTube, there'll be a link. We'll give you full examples. What are your thoughts on that? And do you have any TCAs that you're helping first-time home buyers get clear and move in?
Yeah, that actually reminded me of one that I helped this client with in Baltimore. So, okay, so this is interesting because first-time home buyers, they are how do you say we've discussed this at length. They're not like super young babies, right? They've been working for a while. They're smart. They've have some money. This particular client actually lost a parent, sadly, but was receiving some inheritance, and they were not married yet, but kind of realizing maybe we should buy instead of continuing to rent. But sharp guy financially. Hey, he said, "Hey, I could invest the money and I could have a higher rate of return on it. Can you help me figure out if this is really in my best interest? Because I might only own this property for 5 years." And I was like, and we were on the video call at the time. And instead of like just going and be like, well, this is what it costs, like these are the closing costs, I was like, you know what? Let's just do this exercise together. So I opened up the mortgage coach and filled out all the assumptions. So I obviously, if you haven't done it already, the assumptions are really straightforward. You're asking them what's their rent, what do they think it would increase in a couple of years? What is the available asset, right? So he was getting right around 100 grand. And his question was, look, I can earn a rate of return. And we talked about, okay, what do you think you can earn on that? What is the S&P doing? What are you diversifying it? So we estimated an 8% rate of return on that on those assets. So I plugged that in. I also then plugged in that he's a single, he's going to file his taxes as a single person, and that I looked up his income and his tax deduction or his tax rate. So I plugged all that in while we were on the call. And then I said, let's just do this. Let me share my screen with you. I'll go through the rent versus own analysis just to kind of help you with monthly payment. But what I did was I changed the rent versus own to the 5-year net worth. And I said, let's just look here in the bottom right corner of the website. We're going to look at net worth in 5 years. And I said, if you took your money and you invested it and you earned that 8% rate of return and you kept renting, you would absolutely make more, earn investment on your money. Like that's a given. So that's awesome that you're thinking that way. But look at the other strategies. Now, what I was showing him is 2 different properties with 2 different down payments. So I was able to show him that in just the 5 years, he actually would earn a higher rate of return. And he said, oh, that's so interesting. And he asked me, what did you plug in for appreciation? What did you plug in for all the details? And when you click on the detail, you can see everything that's outlined here. You can look at what I was estimating for the rental increase if he continued to rent. I included property appreciation, his tax bracket. And this really helped him. And actually, his girlfriend was super pumped, right? Because emotionally was like, I'm super excited about this idea. We love this property. I love the kitchen. He was really dialed into the financial aspect of buying versus renting. So I think this hammered home the concept and then really elevated my presentation compared to someone else that was just maybe sending a rate.
Yeah. Have you told this story online or social or like kind of blown this up? I mean, it's a really cool story.
No, but I should, Dave. You already called me out on like the main thing I need to do, create more business. So yeah.
Yeah. Well, here's the thing I know about you. You will do that. Go ahead and stop sharing the screen.
Okay.
We'll get a link, a shareable link to this. If you're watching this in YouTube, there'll be a master link brought to you by housing.link. Thank you, Scott Nicholson. And then all the links that we've mentioned, sign up link for Hoosie. For all of you that are watching this, that you're not mortgage coaches, guys, the best of the best are mortgage coaches. They're helping consumers solve their needs. By the way, Gina, would you say one of the biggest problems that you need to overcome on a daily basis is like, should I buy now or should I wait for rates to come down? And then if that's not one of the top 3, what are some of the top 3 challenges that you're having to help buyers overcome in this market?
Sure. Absolutely. I think people are wondering if they should wait to buy, but I haven't gotten that as much as it's like, how do I do it? And maybe that's just kind of how I've set things up with my realtor partners or with clients that I've worked with. And that's just sort of repeating itself because I think that like whatever you do well, you'll just get more of that. I do really believe that. So what I've been working on the most is, Gina, how do I do it? But we're not talking about people that don't qualify or have very little funds necessarily. My biggest the most loans I'm helping clients with is the how do I get from A to B? I'm a successful person and I'm super frustrated because I believe that I should be able to do this, but I'm kind of been told no. So or not no, but like, oh, you have to sell first, or oh, you have to work for 2 years self-employed, right? So where, like I said, if it makes financial sense and the client is legit, we can figure it out. So that's where I've been spending my most time. Okay, they're like, hey, I easily qualify, I know for hire, but I don't want that. I want this. Show me how to do this. And so that's where I probably spend my most time is
The best way to buy. And I know when I interviewed Daniel Saw last time, his value prop to realtors were, I'm gonna get everyone you refer to me super excited about buying a home and how to win in a multi-offer situation. I don't know if you're dealing with a lot of multi-offers, but it sounds like you're getting people clear on the best way to buy a home given their unique circumstance.
Yeah, there's definitely competitive situations if the property move-in ready and checks a lot of people's boxes. But I do think everyone has their unique situation, and it's so I think that's why we do separate ourselves from AI, because we listen and we zone in on that unique thing that's so specific to that person, that's just not specific to everyone else. And then we just I very simply say, look, I'm going to show you how you're going to be able to do it. And if you want to do it that way, then great. And we'll set you up to win with the realtor partner. So
Love
yeah,
it.
it's not rocket science at all. And people really do want to achieve the American dream, and the numbers just need to make sense for them. So if you can just show them how to get it done instead of saying, "Oh, sorry, this doesn't work for you, too bad." It's saying, "Hey, I know this one didn't work for you, but let's talk about how we could make the next one work." And always giving them a yes. It will keep them excited.
Cool. Well, let's wrap up with a couple things. One, now that you have this new mortgage coach with AI for the borrower, you've heard how Jeremy presents it
Yeah,
to the
I
consumer.
like that.
I would love to hear your version. Like, just, I don't know if it's a minute, I don't know if it's 30 seconds, but if you could just give us a Gina Meyer script of what do you say to the consumer before, whether you email it, you text it, you show it to them so that they know how to interact with it. What's that going to sound like?
Sure. Yeah. So I'll just preface this. Like I said, I do a lot of Zoom meetings to get in front of the client. That's where my highest conversion comes through. And then after the call, my process is I say, I will send this to you. And they almost think it's like a gift. They're like, thank you so much. But I would say, hey, I know we went over a lot and there was a lot of information, and you might not have caught every single part of the conversation. So what I want to let you know is, I'm always here and happy to help. So call me, text me, email me. But if it's in the middle of the night and you're looking at it, while you're getting ready for bed and you feel like, oh, it's just too late to message Gina, you're welcome to utilize that AI chatbot, because let's just say you forgot what title insurance was. You forgot how, where to find the closing costs. This will guide you to that answer very quickly. But you're always welcome to call me anytime. I mean,
Love.
I want them to come back to me, but I would absolutely educate them on how they can utilize it. I mean, even I was playing around with it, and I loved where I was testing it and said, are these good interest rates? And it said,
Right?
hey, give Gina a call. She's happy to walk you through and compare different rate options. There was one that was like, what the heck does title insurance mean again? Or how do I find the closing costs? Interestingly enough, Dave, and I know you know this, that's sometimes I have clients, I'm like, I went through the whole thing, showed them where to find all the information, and they're like, does this include my insurance? And you're like, yes. So I could say, I typed in, does this include homeowners insurance? And it answered right away, yes. And this is where you can find it. So I certainly don't want them to feel like I'm not available. So I would definitely include language like that. You can call me anytime. But I would say, but if it happens to be in the middle of the night and you're just thinking about it and have a quick question, utilize that chat bot. It probably will point you in the right direction.
Yeah, and I would push all of you guys to get really good at recommending prompts because consumers are going to use this with or without you. And the
Yep.
goal is to have them use it with you. I did a interview yesterday with Wally Ellerberry. And by the way, It's live on our Facebook group. It'll be on YouTube. And he actually has 10 prompts that he used. He shares that with you, but like I'm going to show these just really quickly as we go into wrap up. Take a screenshot of these. Remember, they'll be in the YouTube channel. Wally also gives you a link. But the thing I liked about these prompts that he's giving consumers in tailored ways, they really help position him as the advisor. You know,
Mm-hmm.
what are your long-term financial benefits of owning a home versus renting? My favorite one is the last one, which by the way, I'll show it to you in a minute. But I would put
Yeah.
that. Can you explain the total cost difference in interest paid over the life of the loan with these options? Strategic questions. Can you explain the difference in my net worth? Like that net worth option that she showed, this would give a really cool answer. And then, of course, my favorite one is number 10. Help me understand the difference between lower in payments, not the highest, not the lowest, or the lowest cash option. So whenever or what's the difference between lowest payment and lowest total cost over time? So I
Mm.
want everybody in this community thinking about smart prompts that at the end of the day help consumers, remember what's modern, to make, the fastest, most efficient way of delivering something in a way that creates the most value. And you know what creates the most value for a consumer? First and foremost, getting the home and then achieving financial freedom with that home. Like having a home and experiencing financial freedom with that. And how do you do that if you are not a mortgage coach like Gina? So Gina, we're in the last 3 minutes. Any closing thoughts you want to make sure everybody hears before we run out of time?
Yeah, I love the chatbot. I would say if you're not using it, start using it. Learn the different portfolio products, utilize them, and I want to say that. Yeah, follow me on Win of the Week. I'm gonna try to do something like that. I'm gonna really try to start sharing these wins when, wow, how simple to share, and that's definitely where I need to work. So I have a big takeaway myself.
All right. So follow Gina. Gina, I know well, it wasn't last time, it was time before where you used some of the first home IQ content to bring some
Yeah,
education to a classroom. One of your daughters, I think you went in and did some type of parent, volunteer work.
yeah.
Uh,
Oh
I
my God, I
I
love it so much.
are you doing any more of that? Are you doing any more stuff like that?
Mm, no, but I every year now, so I volunteered for the high school wings program, which is basically after the seniors kind of that week in between finishing up their schoolwork and the actual graduation, they intern for a week. So they interned with real estate professionals and they had the realtor, and then I had them come in and we do the role play, and we did all that. And afterward, of course I run into them at baseball games and I'm like, hi. And they said yours was my favorite. And I think mortgage isn't wildly exciting, right? It's just adding debt, but at the same time it was super impactful. And what I've learned from that, with everything there's a learning lesson. What I learned from that is next year I want to have them come spend more time because I'm going to put them to work. So I'm going to, what I think they need most is getting uncomfortable with making phone calls and talking to people.
Yeah, I
So
like
that was
that.
my,
I like that.
yeah, I think that they just kind of sit there and get on their phones, and I'm like, oh, let's practice. I told them, let's practice role playing. And I think that they enjoyed that because it was interactive. But I think next time I'm going to actually have them make some calls for me.
I like that. Put them to work. Guys, I just closing thought, put a link to the new upgraded First Home IQ quiz. So I put a link down below. Would love to have everybody watching this more involved. There's a lot of free content that you can just use with no cost. And if you want to be an ambassador and have your own link like the one I have, reach out. You can either engage with First Home IQ on Instagram. You can just ask it questions. You can sign up and become an ambassador. Just talk to the chat. And then if you are not a mortgage coach, guys, trustengine.com, get signed up today. You can either sign up as an individual LO or like Gina, she works for Cross Country. It's built into Encompass. By the way, do you guys use the Encompass integration when
For
you
sure.
create notes?
Absolutely.
So
Hmm.
So
Makes it
you want,
so easy. Back to the speed and convenience.
yeah. So tell your executive team you need Mortgage Coach built into your tech stack. We integrate with LOSs like Encompass. We integrate with Optimal Blue, Poly,
Uh-huh.
all the pricing engines. So trustengine.com. Gina Meyer, you're the bomb. Appreciate you. Have a
Thank you,
great day.
Dave. You're the best. Thank you so much, guys. Have a good
Take
day.
care. It's a wrap, everybody.